Is the Australian property market a Ponzi scheme? And the answer is yes and no. In some ways it is, and in some ways it's not. And in this video, it's a little bit different. It's not about my suburb reviews, but it's a warning to all the investors out there to be careful about what location you choose to invest into. Because it has come to the point, and it's come to my realization that investing in property is a little bit of a Ponzi scheme. And I'm going to explain exactly why in this video. Now, I'm still pro in property investing. It's a lot of what I've built, etc. But in recent times, there has been a surge in the number of buyers agents, in the number of property investors, in the number of rent investors. And what that does, it brings a lot of new demand into different regions and locations throughout Australia. And I'm going to focus on this little suburb here. And please don't take any note of this suburb. It's just a random location I picked off the map in regional Victoria. So when I talk about this location, it's just completely random, okay? And before I do get into the video, if you have not already, make sure you are subscribed to the private community. There's over 280 investors currently in the community helping each and every single person out, identify the best locations, work through different problems, identify the type of properties they want to invest in, and help them succeed. It is a no-brainer when you're buying a $500,000 to $1 million asset. Spending $35 is a great investment and a great ROI. So if you're still struggling, if you're still unsure, jump into the private community. Just try it out for 1 month. We will help you out. We will assist you. And then you can stay in if you want to or not. But I guarantee you, you will, because there is just that much value. So make sure you click in the link in the description and make sure you join today. Now, let's have a look at this suburb here. This suburb is a small little regional town in regional Victoria. We have our local buyers in this regional area who are supplying the economy. They are the normal supply and demand, and there is a balance in the economy, right? That's when prices are relatively stable. If you look back, they grow at their own pace. And what you can see is that there is not much stock on this market. So if I went to suburb and I looked at the number of properties, there's about 43 properties in that location. Not many houses available for sale because it's a small town. There's local buyers, and that's about it. But this is where the Ponzi really comes into play. And what I mean by this, because eventually you look at these properties and wow, this is a nice little house that's for less than $400,000. You'll most likely get a pretty good yield on it as well. So it's almost neutral or positive cash flow from the very beginning. Now that is very attractive for investors. And it's not just for investors that it's very attractive. It's also attractive for buyers agents. And this is critical because now you don't only have the local buyers trying to buy property in the area, but you have the buyers agents who are also looking at this area as an investment opportunity because it is cheap, it has decent yields, and that means it's attractive for normal retail investors. And this is where the problem comes in. These buyers agents don't just buy for themselves, they have a host of clients, and each buyer's agent might have a different number of clients. Buyer's agent number A may have 20 clients, buyer's agent number B might have 10 clients, buyer's agent number C might have 30 clients, and so on. And so not only do you have the 6 local buyers trying to buy property in the area, you now have BAs who have hundreds of people who are trying to buy into a very small regional town. And what this does is this upsets the supply and demand metrics. Now we have an increase in demand, which is seen through the days on market, and we have a decrease in supply in the stock on market. And that causes house prices to start to increase. It depletes the stock levels, and more buyers start buying up property at higher prices because you pay more to try secure a property. That's just the natural order of the world. But it's not just the local buyers, it's not just the buyer's agent and the number of clients that they have. Eventually, you have normal retail investors who come in and they also want to buy the properties in the area because they see house prices are growing. And that creates a problem. Now we have all these buyers, say 100, 200, 300 different buyers trying to buy in a very small regional town. What this does is that the 43 properties that were once available for just the local buyers have now completely and utterly disappeared. And this will cause house prices to continue to skyrocket. And there is a reason that this is a problem. Because you now, what I like to call this outer ring as artificial demand. BAs, retail investors, this is artificial demand. People coming into a location and pumping up the price. That is an issue. And this is really susceptible for small regional towns because there is very low stock and then this in demand from East Coast investors from Sydney and Melbourne and now Perth even is coming in and pumping up this very small regional town, causing house prices to elevate. Now, is this a bad thing? Yes and no. If you are a long-term investor holding it for 10 years plus, these are the type of locations that you want to be avoiding at all costs because eventually, after maybe 1, 2, or 3 years, this artificial demand will start to leave. And these buyers agents who have all these clients will also start to leave, like so. And now you have no really artificial demand and you just have local buyers who can't afford the properties in the area because they aren't on very high incomes. Now, this is not a association to what the people actually make in this regional town, but this is a point that I'm trying to make. And because they can't afford the properties in the area after it's been artificially boosted by all this demand, what happens is that prices begin to fall. And when they fall, you as a long-term investor will lose money, especially if you buy close to the top of the market after everyone has already left. And that is very risky because these people who live in the small regional town do not want to uphold these ridiculously high prices. And this is why property can be a little bit of a Ponzi scheme. It's a bit like when you look at a meme coin in crypto. Now, for those of you who don't know crypto, it's a good example to show you of what if a lot of investors bought a single coin that doesn't have any intrinsic value, it can be created or give the illusion that the prices are higher and it's rising when it's not really. It's just a number of supply and demand. Once that demand leaves, like the buyers agents and the retail investors, we can see that prices begin to drop. And this is why you have to be very careful about buying in small regional locations like this town here. So as a retail investor, if you're a long-term investor, you still want to be buying in good regional locations like the Bendigos, for example, like the Albury Wodongas, because they have solid economies that are upholded by the local area and owner occupiers. They're people who want to live and work there and they have much stronger economies. And when you start to invest into these small regional locations, you are at the risk and at the mercy of artificially created investing, hence the Ponzi scheme. And this is only going to get worse. As they become more investors and as they become more BAs, this problem will exemplify itself and it will get worse and worse. And so if your buyer's agent is trying to push you into a very small regional town, ask them to explain why. Ask them how long do they intend to hold a property there. Ask them, is this an artificial boom? Because it is very risky if you go into a location like this and you do not understand the fundamentals of property investing and just buying because prices are low and yields are high. It is not the right way to do it. So you need to be very careful because investing in property is somewhat, to some level, becoming a Ponzi scheme that is being created by artificial demand in these very small regional locations. Now, I'm still very pro investing in good regional hubs because I'm a long-term passive investor, so I can ride out these small dips and highs, etc. But for those who are short-term, who are looking for quick money, you need to be careful of these small regional towns. Now, of course, if you're in for quick money, then you might get some money and then you leave, but that is the artificial supply and demand. So I hope this video has given you a bit of insight into property investing and how it's become a little bit of a Ponzi scheme. And if you have any questions at all, please leave it down in the comments below. And like always, jump into the private community. This is the community and the largest property investing community where we will help you out and talk about different locations, the best locations to invest into, the locations that you want to avoid, and we can help you get the right sort of asset. Till next time, thank you.